physiological and psychological attributes that make a good scalper, and then we'll look at the actual strategies themselves. So, any comments, please stick them in the chat box. I'm more than happy to take criticism, and if we can all improve all the time. So, please let me know, and if not here on our Discord group. So, join us on Discord. That's where most of our communication is done with our clients. You, we're here to help you. Okay, so let's just make me a little bit smaller. So scalping strategy, I've subtitled it BWAP as well, because we'll look at BWAP as well. BWAP's added to this setup when I did all these slides many years ago, but many years. Okay, so welcome, and let's crack on. So I'm not going to run down. I'm going to run through these first set of slides quite quickly because we did it all in more detail last week. But basically, my background is in principally in the City of London. I work for two big international banks in the city in the early 80s and 90s. I didn't start investing and trading myself until the late 90s. There's a story there which I'll do a big anti-list showing you for a podcast later on. So join me for that later. I'll explain how I got started. And then we moved the family to Cyprus in 2002. Quality of life type of life. And I worked for CFD brokers in Cyprus for about 10 years, probably longer. Anyway, my approach to trading and investing has always been the same. Keep it simple. Trade the time frame that fits you as a person, and keep probability on your side. So do not problem. Keep it simple. And, really, you need to understand things like margin and leverage and spread. If you don't understand those basics, stop now. Don't risk any of your hard-earned money, whether you're scalping, whether you're swing trading, whether you're long-term investing. Understand the principles of what you're investing in all those money. But principally, above everything else, is about knowing yourself successfully. So let's crack on. So we're going to quickly run through these first four bullet points here. The risks and benefits I'll go through again in a bit more detail. Obviously, scalping is short-term trading. We're trying to do lots of trade very quickly, not get stuck one side or the other side of a position. We're in and out quite quickly. There's pros and cons as to any type of trading approach. I'll run through those again today. In my opinion, this is all this is, remember. Just because I've been around a long time, because I've been doing this for a long time, doesn't make me an expert, far from it. I mean, all the mistakes anybody could ever make, I've over-risked, I've done revenge trading, panic trade, I've panic bought. I made a mistake the other day live on air and blew my account. I miscalculated, I put in 0.5, sorry, I meant to put in 0.5%, I think, on the risk calculator, and actually I must put in 5%, and it just, the euro trading went against me. And the platform closed me down. So, even when you've been doing it for 30 odd years, you still make mistakes, and that's part of being a human being and what makes us human, as I say. So, 6 attributes make a good scalper. And then I'm going to run through these last 4 here: the triple exponential moving average, the BWAP, volume bands and stochastics, moving averages setup. Last week now, and I'm not sure if we're going to time to pivot points. I'm jump through that one. But we'll have a look at one I introduced this week as well, the raincoat chart. Raincoat is quite good for scalping. It's all based on price action rather than time. So focus on talks when we have a change in price action. So great for identifying spot resistance areas as well. Raincoats, we'll have a look at that as well if we've got time. So we're already 10 minutes in. So let's crack on. I'll run through these. So basically, don't get stuck being a bear or a bull. You've got to be able to switch from one to the other as a scalper. You've got to be able to get in the market. It's all about that balance between risk and reward. You're making lots of trades very quickly. Trade the tightest session. If you're a forex trader, you want to be trading now. Basically, US is about to open. Stock markets in the US is about to open, so the liquidity kicks up as well, even in the forex market, which is still centered around London. So the London and New York session are the 2 best sessions to be trading. You can obviously scalp in the Asian session, but just be aware that liquidity and the spreads can be a bit wider. The accidents and mistakes all tend to happen in the Asian session when it don't try and trade too many things. If you trade forex, keep to the big big dollar crosses. If you're trading stocks, stick to the major, highly liquid, highly um, traded stocks. Trade indexes, trade keep to the majors. The spreads will be wider on the more junior markets. But these are my ideas. Stick to one market, one or two pairs, just one pair if you want. Trade with the trend. What's the higher trends doing? If you want to, again, this is just I don't follow these rules all the time, but these are rules to keep in the right side. But very strong trend, like we have been in the stock markets, for instance. Be careful, trying to short the stock markets when everything is still going up higher time frame. Also, we had that massive volatility um, last week on Friday in particular. Personally, I was hit quite significantly on Friday. With some set and forget positions I'd had up, stopped at similar, very secure, a long time away, all got taken out. We had a big 2% plus loss on Friday on the stock markets. It was 2.769%. I got hit for on Friday. That's quite a big whack. It was not as bad as I thought it was going to be. I thought it was 3% plus, but I lost a percent on the S&P. I lost 1.19 on the Nasdaq and 0.85 of 1% on the Dow trade that I opened last week. And then yesterday, the DAX trade that we'd taken earlier had also got stopped out. So anyway, story for another day. Talk about trading. So don't be in front of your screen for too long. And as with any type of trading, control your emotions. The thing with scalping is the time frame makes it everything is compressed. So your euphoria and your sadness can move up very quickly. Your heart rate can start racing very, very quickly and takes a while to calm down. So always control your emotions. Fear and greed business. Can't get rid of it because we're human beings. We just got to manage it, bring it from the back of our subconscious to the front of our brain, our frontella, our little brain. It's keeping us safe. Always makes us want to run away from difficult situations. You've got to be able to control that and manage it always, always, always. Keep your risk small. Don't let that risk get too big. As I say, by default, although I subconsciously I thought I'd lost more than I had on Friday, it wasn't as bad as I thought it was because of this thing that I've done for years and years and years, always managing my risk. So the Dow lost at 0.58 at 1%. I mean, the numbers were massive. It was 600 points, 269 points on the Dow, but the loss was only 0.58%. So, it's all about balance, friends. Obviously, with Forex, you don't move those sort of percentages sometimes, but it's quite difficult. Okay, so quickly through these two slides here, the pros and cons. So you get a high hit rate because you're not trying to predict a long distance with scalping. So if you're the sort of person that needs to be right all the time, which is what I was like when I first started off, and still am to an extent, as my default. I like to be right. I like to be a bit of a Tony, so know-it-all sort of thing. But that's just how I'm built, and I've accepted that over the years. Big benefit for many scalpers that attracts people to scalping. There's no overnight risk. There's no risk when you close your position. You close your book. So you open at 9 o'clock, you close at 5 o'clock. Run it like a shop. Or you open it at 11 o'clock, you close it at 1 o'clock. How long you want to trade? You open it when the London session opens, you close it when the London session closes. Or New York. So you only trade the overlap, the busiest of them all. When you only open New York open, when London's open, New York's open, and you close it when London closes. So you're only trading for 2 hours between 2 and 4, 2 and 5, something like that. GMT. The other big benefit of scalping is because your targets and your stop losses are relatively small, you're not using a lot of the margin on your account. If you don't know what margin is, stop now. Don't risk any of your real money. Go and find out. You owe it to yourself. So you've got a lot more opportunity to take more trades on because you're using less margin with your targets and stops being close. If you don't trade it with a target, you don't trade it with a stop, I would argue stop now as well. Look at that, what that means. Now, stop loss is there to keep you safe. Your stop loss is less than 2%, less than 3%, certainly of your entire account, you stay in business much longer than if you didn't have a stop. You'd be experience very, very quickly simply because you're doing so many live, real trades. You're not waiting for the market to turn. You're not waiting for an inflection point on the hourly chart or the 4 hourly chart where you might only get 3 or 4 trades a week, or an end of day trade where you might get 1 or 2 trades a week. You get a lot of experience very quickly because you get lots of trades, so you get to find out whether this is for you or it isn't for you very, very quickly. You've got to be able to. It helps if you're an adaptive, be able to adapt quite quickly because again, people tend to, because they're subconscious, they're not brains, tend to get stuck in a position or tend to believe that they're right. I've done all my analysis. I've spent, whatever it is. This has got to go up. Or the data came out, or the news came out. This is really, really good data. The dollar should really rally from this. This has come in line with expectations, a bit better than expected. The dollar's got to rise, gold's got to go down, and quite often the exact opposite happens. And people, again, because of subconscious issues, because of physiological issues about how we are as human beings, we can't accept that. So we've got to be able to adapt. And even when you've got a really strong trend on higher time frames, on like, I don't know, the hourly trend or the 4 hour trend is really, really strong, doesn't mean that you can't take the benefit of that scalping. So even if you're taking all the long positions only, you can still get the benefit of this big strong trend. And just be aware that if you're going against the higher time frame trend, that you're going against the tide, big waves. So big waves going into the sea, into the shore, and you're trying to swim against, you're trying to go into this huge wave against the tide. Very difficult sometimes. So trend following is always something I've done, regardless of the time frame that I'm trading. Okay, so they're the benefits of scalping. The risks and the downsides and the flip side of most of those. So because you only dealing with a target that's only 3 or 4 pips away, or 5 pips, or 10 pips away, or whatever it is, you do need a high hit rate. You do tend to get a high hit rate, but you also need high accuracy. If you've got a system that's not quite kicking it, you can end up having lots and lots of losing trades very quickly. It can be exhausting simply because of the concentration levels. Even if you're trading with a robot or a automated system, or the benefits of AI now, the world's going to be saved by AI. We're not going to have any jobs. We don't need to work because AI is going to do everything for us. It's still going to be very, very tiring. One of the biggest issues, though, is that number 3 there, the cost per trade. Your cost per trade is much, much higher when you're only trying to make 2 or 3 pips or 5 pips compared to if you're trying to make 100 pips. Because the spread is the spread is the spread is the spread. Markets don't care. Brokers don't care. If you want to buy it, you've got to pay this price. If you want to sell this thing, you've got to pay this price. And only when this price moves to one in your direction do you make money. Okay, so the spread is the same whether you're looking for all of this or whether you're only looking for that. So that distance has a much bigger cost, isn't it, than when you're only trying to get to there compared to if you're trying to get to there. The percentage-wise is much bigger. So your percentages, your cost per trade is much higher. The news of the day, or the noise of the day, or the tweet of the day, or the Truth Social post as it happened on Friday of the day can completely screw you over. Excuse my language. You can be fooled by the noise. So make sure you know what the scheduled news is. If you know something's coming out at 3 o'clock, 2 o'clock, 9 o'clock, whatever time, make sure you're aware of its high impact and what it may or may not do. Keep an eye out for the rest of the news. Obviously, you're not necessarily follow the real Donald Trump, but it may help. If you can filter out the politics and the market moving news, obviously Friday was that big noise about more tariffs on China, and he obviously pulled it back a bit over the weekend, but there's still, the rhetoric's still flying. China hasn't backed down. China was never going to back down. So that crash continues. So, as I say, the time for money exchange can be very high as well. You come out at the end of a hectic scalping session, and you might have only made 15 pips or 20 pips, but you've made money. You're up at the end of the day. That's great. But if you're looking on an end of day basis, 15 pips, 30 pips, you might have to look on it once. That's it. There's my target. There's my stop loss. Set it. Wait till it gets there. Get about. Don't have to look at it again. Whereas with scalping, you're watching all the time. Okay. And the big thing, the big risk, the big downside, which I think I've touched on, I've already It's this exaggeration of our emotions, our fear, our greed, our hope, regret, all those human natural things, you know, doubting ourselves, the little voice in our ears, all of that, you know, emotional makeup that makes us human beings, all of that can get welled up and get much, much more exaggerated when we're dealing with short-term, fast, quick-moving, rapidly volatile markets. So if you can cope with all of those things I was talking about in those two slides, scalping may be for you. So let's have a look at um, some of these strategies. So these are, you know, as you probably gathered from what I've said before, this is, in my opinion, what makes a good scalper. What are the attributes? Emotional control. You can deal with pressure on a continuous and continual basis. You can accept that you're wrong. That's one of the big problem, as I said earlier, certainly what I had when I first started, and I see it with most traders I see, especially male traders, especially young male traders. They find it very hard to accept that they're wrong. They'll listen and they'll follow the rules sometimes, most of the time. They'll nod their head, they'll write their notes down, they'll set up their charts nicely, they'll, you know, set up their price action charts, whatever way they're trading nicely, but then just can't cope with being wrong. You know, you'll be able to have quite a decent cognitive load. Doesn't mean you have to be clever or anything, anything but. It's about emotional control even more than anything scalping. So it's emotional intelligence, not sort of intellectual intelligence when it comes to trading in general. And again, with scalping, it's just more focused. Deal with losing, deal with long losing streaks. Be able to adapt to changing conditions and just forgetting about things. I won, great. I lost, not so great. Get on with it. Wait for the next one. There's always going to be another one coming along. Don't try and, you know, get back. Yesterday I was twitching to try and take long positions on the markets, stock markets as they were moving up. I didn't. My system hadn't triggered. My system had triggered for me to get in long when stop loss was. We took this loss on Friday. We bounced back yesterday. Then we were down again. Then we were up again. We were all over the place yesterday. We're up again this morning. But you know, my end of day system that I share with you on Discord hasn't triggered on. So just got to forget about it. You know, took that loss to you. It's the worst loss you've had for a long time, and it still sticks with you. No matter how long you've been doing this, you still remember that. I will remember that for a while. The 10th of the 10th, 25. October the 10th, 2025. Quite a big hit. But you know, I've been successful every single month this year, and we just happen to be down for October at the moment. There's still 20 weeks to get back, even get us back to even. But we'll see how October ends. October, obviously. So for me, pros and cons of scalping, and that's what makes a good scalper. So look at one market, try and trade in the direction of the trend, be aware of the physical draw on you, try and trade the time where it's the busiest, which is this now in the day when London and New York overlap, and just be in control of your emotions. You can't get rid of them. You can't stop being scared. You can't stop being greedy. You just manage them. You take them in. It's the same coin, fear and greed, part of trading success. You've got to control both sides of the coin. Flick it one day, you might be really scared. Flick it another day, you might feel really greedy. You feel you can't get anything wrong. Trade after trade is a winning, and then all team goes wrong. So always manage your risk. Keep those losing trades. Okay, so let's have a quick look at some of the strategies we're going to look at today. Last time we did hike and action, I briefly ran through the crossing EMA strategy. It's a trend following approach. Works well at, you know, 1 minute to 5 minute, all the way up to hourly and daily. It's my bread and butter strategy. It's a trend, very old fashioned, many people say, exponential moving averages. We're just waiting for the cross of them to either go long or go short. So the first trigger is the cross of the 5 and the 9, whether above or below, or the 3 and the 5. Again, the numbers here, I've used both of those. I know lots of people use 8 and 13, and 9 and 13, because it's, you know, 13 weeks in a quarter, 52 weeks in a year, so people break it up like that. It just 21 EMA was one of the first things I ever used. It just stayed on my chart basically. Also, It's very close to the midpoint of the Bollinger Band as well. Bollinger Band, remember, it's a 20 standard simple moving average, so you can use the midline on the Bollinger Band, which you have 21, as an alternative to 21 EMA. And we'll look at some of these others as well. Pivot point might run through. I've got that set up on my trade point at the moment. So there's stochastics and Bollinger Bands, AMA, EMA, and say BMA as well. So that's how you can actually look through last time. And this is because this is the crossing EMA strategy, the 9 to 5 and the 20, because I've used the midline of the Bollinger Band. See, the Bollinger Bands are the green lines on here, the blue and the yellow, the 5 and the 9. So you can see up here we've been long. See the cross there, went long here, the orange trade, and then came back through the 9 to take us out. Oh, sorry, I didn't explain the exit strategy. All right, just here. So exit when the price crosses the 9-period EMA, so it's the middle EMA. It's one way of running this strategy. So you can see that on here. But you can see the 5 and the 9 cross here. We then get an entry on the confirmation of crossing into the upper half of the Bollinger Band. We then run up, and it runs back down under the 9-period there, so we get out there, then gets long again there. We're still in the upper half of the Bollinger Band, still above this 20-period, so you can enter there. Then it gets short and closes out our long position. That's a sort of flat, not winning trade. Then it goes short there at the blue time. You can see that blue crossing from above to below the yellow. That red candle there, it's under the 20s also. Both of the targets have been triggered. So down we go, down we go, down we go, down we go. Here we've gone back up and tested into the 9, but the candle hasn't closed above the yellow, has it? It hasn't closed over until there. So we're out there. So we don't get all of that. We give up some of that. That's just what happens. Trend following. Then it goes long there, but it then comes back. So that's our exit of our short. Cross. We then get long there. That's just about gone over the 20. It's the 1 minute time. So whether that actually showed that on the time, I don't know. It's probably why that hasn't been got the purple line. Next entry is there. It's definitely strong. So we moved. Looked like it's going to move down. Didn't happen. Strong candle there at you can see that 14.10, and off it's gone. And at this point, when I took that screenshot, it was still long. The stop loss was here at this 9-period, and it was still moving up. I think the red must have been the 50-period moving average. Anyway, you can ignore all these other indicators on there. It's just an example of a crossing, very simple, at the 1 minute time frame from October the 23rd. I don't know, from 9 days, 2019. I did that slide was from. So this is 6 years old. So and it's a strategy I've been using long before that as well. So, and euro dollar then on the 23rd of October was 111.14. So again, numbers don't matter, but that's the strategy. You're looking for this to cross. So yeah, there's that low. Yeah, so it kept going. It was out there because we went under the yellow, got back in here, went back over the blue. Definitely out there. So out and short there. So that's a massive run there. All of that. Yeah, massive run there on that one. And there's the next one. Same. This is what's this? The 31st of October. There's another short. Left a long and out blue. Short. Green. Sorry, short at that green for go. Down we go here with this red arrow. And that, again, that's still short as that screenshot came off at 12.44. Crossing the moving average. So anyway, you get the point. Lots of false, not lots, but you get false triggers as well, but you can see how successful that one's been. Let me just bring up. So it's very simple. If I bring this, bring it right up to date. This is my trade locker platform. So this is the same setup, guys, just different colours. It's the 5 minute on the down. So we've got the 21 EMA, the orange line here, the higher time frame, and then the blue and the pink is the 5 and the 9. So you can see here. There we go. This must be this is the 5 minute time frame. This is on the Dow, so that would have been short here, down, 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 and then boom, volatility. Sorry, I've been losing trade, but that's gone long there on that open. If you want to trade it in the open, as you can see before the open, what was going on? We were trending higher, weren't we? Nicely. So this was a nice big move. And I put this area on before. If we go to the higher time frames, I set this up before we came on today, round about sort of earlier on today. So this was a key area. If I go up the time frame, you can see all those blue lines and that pink lines on there. Go to the hourly time frame. You can see where we were before Trump's social media tweet. We were sort of pivoting around here. We were holding up. So this is the hourly chart. So it's not scalping, but it's the hourly time frame. You can see where it's the high time frames come into play. So Trump's interjection was here late on Friday afternoon. I was out, I was watching. My stock was got whacked out. So as I said, I happened to be where we were. We rallied here yesterday, and then we went down again yesterday, and then to close. This is the US Open, so we were up in the morning, down into the US Open here. So the US Open yesterday took us all the way down to 45,000, blah blah, whatever it was, doesn't matter. And then we rallied strongly into close, and then we closed out around about here, so we had a down angle. So this was on the 5 minute time frame, this was my initial target this morning, this blue line. You can see we've been long all morning. So when I first set this up for you today to show you, this was the initial target, and that's the area, this recovery is continuing. That's a pivot area target to the upside you would be looking for, this 46,600 level. And that was purely by eyeballing this lot. Nothing particularly technical about that, just purely eyeballing the price action. You can see here how comfortable we've been last week. This was the 6th, the 5th, the 7th, the 8th. Fairly comfortable around about a 46,600 level on this particular asset. It happens to be the Dow for the interjection from the president. So all of the panic from the president's interjection has been bought back since. So the question is, where do we go from here? Was this an overreaction? Will China and the US come to some sort of agreement in both parties benefits to both parties benefits for that to happen? So, but anyway, as far as we're concerned, from the scalping point of view, so you see here from a scalping point of view, yesterday's open was a really big, powerful candle engulfing the previous action. So we bought there on this time frame, and it's still long. It hasn't closed, or it's touched it now. The candle hasn't closed below 9 periods. So from here, we are still long on an hourly time frame. Come down to our scalping time frame, our 5 minute beauty, what we're looking at. We've been long all morning, it's been going up. And that's when I looked at this before we came live, I just wanted to see where we were. So that's our last long into this area again, and that had been long, 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 and out there. So that would have been entry there at 12.25, and then got out on that closing candle there at 13.25. So you can see, even when you're trading these short time frames, you can still take, as I said in the slides, you can still stay in and move quite significantly. Obviously, if you just wanted to take the next 3 or 4 candles that went your way and get out earlier, if the trend is going with you, obviously. We've got a lot of activity then in this half an hour before the open. So again, be very careful around um, around the live open, which is what we've seen here. So at the moment, we didn't get to this pivot area that was marked earlier. So interesting, may or may not. But the opening cash session for the Dow has moved us up, and then it's come back down within 15 minutes. Here we are at 14.45, and has moved all the way down. So we're back to this pivot area we were looking for to get to earlier in the day. So this might continue to be our pivot area for the day, which will be these highs from last night as well. Yesterday's high is where we are now finding support. So yesterday's resistance to the upside is now today's support, and that's what you can see tend to stay away from the volatility of the open unless there's some clear direction. It looked, I mean, here, this is that's the 230 one, so it's clearly not wanting to go anywhere, was it? It went up, it went down, we ended up where we were. So this is a bit of a support area right on the opening time frame. You can see where these candles here on this 5 minute time, and they've got support 46, 461. So direction is a bit lost. Obviously, we've got the banks, some good earnings from the banks yesterday. Citi and Bank of America and Morgan Stanley announced their results for the market open. So good bias the area. It still looks like this area may get tested before the day's out, but this is our key support area there. So from a trend following it, sorry, just get back to the point of this, using this as a trend following strategy. It's a bit choppy here on the open. See that? It's not doing it, so you just stay out basically. It's chopping around. Whereas here, we've got a nice trend. It's moving up, staying with it, getting it out. It's moving up. That's the volatility of the open. We might come back to that later. So anyway, that's bringing slides today, if you like, with so that's our crossing exponential moves. I'm going to miss the pivot point one out because it's slides. I'm going to come to this mean reverting strategy using the Bollinger Bands and the stochastics. We have got this on the setup. So this one, we use two simple indicators. The Bollinger Bands set their default settings, so they come out most platforms at 20 and 2, so it's 2 for the standard deviation, 20 for the candles. And the stochastics, I do change quite a bit. This is thanks to a bit of a mentor of mine, a guy called Trevor Neal. Thank you very much, Trevor. And I've tweaked this and played with it, and it is working. So I've put 2.5 here. 2.52 doesn't really make much of a difference. So let's leave it at 2. That's what comes out later on the platform. But the key thing is the stochastics, the K and the D. We changed them. So the K length is 10, the smoothing is 6, and the D is 3. So 10 and 3. I know that might seem a bit strange for many of you, but it's smoothed out that that spikiness you get with stochastics, especially in these the 311 or the 511 on the short settings. It smooths that out. You get more of a defined turn in this failed trips, because it's one of the big problems with stochastics. You can get lots of failed signals. So 20 and 2 for the Bollinger Bands, 10, 6 and 3 for the stochastics, and that's what it looks like on the chart. Sorry, I'm rushing because I'm running out. So that's what it looks like on your black base chart. So there's the Bollinger Band. The orange line is the midline. Here's our stochastics, 10, 6 and 3. The overbought area still in play. Oversold area also still in play. So it adds to the significance of the cross. You can see here this last one here. They crossed in the oversold area. Here they crossed in the overbought area. Crossing in the overbought. Crossing just about on the oversold areas here. Crossing inside the band. It doesn't matter, but it just gives you extra emphasis. Like we can see here. See the cross happens here. We touched on the outer Bollinger Band, and there we go. Right, the rules of using this system is that there's the two indicators. So we have the Bollinger Band and the stochastic. First, we're looking for a touch on the outside of the Bollinger Band. So if you want to go long, you're looking for a candle to close, touch is good enough. Touch the outside of the Bollinger Band. You then need the stochastics to cross. So the K line's got to cross from up and over the D line, and then we take our first target at the mid line on the Bollinger Band, so the mid-line on the Bollinger Band, and then second target at the other side of the Bollinger Band. I suggested take 80% of your position off the midline and 20% off on the second Bollinger Band. You play with that, 50-50, 75-25. Just wait. Just have one target if you need to. You want to play with it. Wait till it gets to the midline. Stop loss needs to be around the turn of the market. You'll have seen the turn. You'll have touched the outside of the Bollinger Band. So it needs to be low, typically at the lowest low of the entry candle or the previous candle. So a low area on the chart that you can see. Okay. The flip side of that, a short position is the other way around. We're touching the outside of the Bollinger Band and we're coming down. So it's exactly the same setup, except we're looking to go down. So if we look at that um, on the charts, yeah, I mean, in strong trending markets, if these mean reverting strategies, which is what this one is, don't work particularly well, but great. That's why it's great for um, scalping, because that's what scalping is, isn't it? We're not looking for huge strong trends, although we can benefit from both setups. So there's the setup. You see the see there. That's a okay. So this is moving up. So our first cross is there. We've touched the outside of the Bollinger Band there. And next candle, literally, we get the cross of the stochastic here. 10, 6, and 3, see there. So there's the cross, the blue crossing from above to below the orange candle here. So we enter here. First target would be there, and second target would be there. So we hit that quite quickly. What's this? This is the DAX on the 5 minute. So there we go. That's a hit. We've now hit the outside of the lower Bollinger Band now, so we're looking to go long. So we've hit the outside of the Bollinger Band there, but we don't cross until quite a few candles later, don't we? So we hit the outside again, outside again. We then come inside the Bollinger Band for 1, 2, 3, 4 candles before the stochastics cross. So we go long here with our target at the mid Bollinger Band, and it goes against us, doesn't it? So if our stop loss has been a bit too tight, or our entry, we would have been stopped out on that one. If our stop loss has been down at the Bollinger Band, the lower Bollinger Band when we got in, we may have stayed in. It looks like that probably would have taken you out if your stop loss had been too close. But it did eventually get to target 1. Didn't quite get to target 2, did it? However, it did then do another cross there, so but not until there. So that's strictly not part of the strategy. So it's got close, but it hasn't touched it. Just like there, just about touched there in that volatility. But whether you would have seen that, but we didn't get across to go down, didn't we? But in fact, we got across to go up, but the price continued to fall down. So we've touched the outside of the Bollinger Band again. So we're now looking to go long again from this point here. Now it's another 1, 2, 3, 4, 5, 6 candles before the blue line crosses back over the orange line. We get across and became the D line. And off we go again to target 1. And then we retrace straight away. Interesting getting to this overbought area. Retrace straight away. So again, if we had our stop loss here, this candle would have taken it out. So we got to target 1, we got to target 2. So now we're looking, now we're out and we're waiting for a touch of the Bollinger Band again. Next touch is the outside of the Bollinger Band here, but we don't get across until 1, 2, 3. So the price actually goes higher again, and we get in here to go short. And again, didn't quite get to target 1, and again, something stopped us out. Eventually did get to the Bollinger Band, but it's too late. We haven't touched the outside. Here we've touched the outside again this time, so we're looking to go short again. Didn't get in until again 1, 2, 3, 4, 5 candles later. We've gone short, and that's got to target 1, and obviously failed to get target 2 again as we close this. Okay, so it's very simple. 2 simple indicators, 2 very popular indicators. Say tweak the settings if you want to. Sometimes I use 2.5. You can see it's 2.5 here. So if it had been 2, it would have been more touches. But my default setting on my template here on the trend on the trade locker is 2 and 10, 6, and 3. So if I just open it, unfortunately. Trend locker in its infinite wisdom has got rid of a lot of my layouts. So I've only got these 2 on here at the moment, so I can't show you. But you can see here against the Dow. Let's just go back there. So it's the Dow on the 2-minute chart. What's been going on? we saw about all that volatility, didn't we, at the beginning of the opening session? It trended higher. So there's that touch on the outside there, down, down, down here, again cross here. So that would have been a long there, at whatever time it is. That's the cross. It left it till confirmation across there. So that's 14.8. For me, that's it's too close to the cash open to be trading that, to be honest. But you can see we're biased to the upside, so we want to be looking to the trend. As it hasn't reverted here, has it? This is a good example of how it hasn't worked. So that would have been long. You'd have got there, then it's rejected there right on the open. So that's the risk of trading too close to the open. You see that 14.18. You would have made profit if you'd got out at 14.26. There's your first. Not massive, but it's still a profit, isn't it? Following the rules, we hit the midpoint contract and we're out half of it, so 8% off. Our stop losses right up here, and then we'd have been stopped out 2 minutes later into the open. So we left the open. What is this strategy telling us? Well, at the moment, that was still going long. This is then touched the outside, so we're looking for across to the downside. We do get across to the downside there. You can see that it's only confirmed. Did it? No. Yes. No, zoom this in a bit. It's the problem with short-term target price. So there's that. You can see there that the blue and the orange haven't crossed until that chart. So you go short there. Target one gets confirmed, moves lower during then, but then think about your stop loss candle we got in on. So again, what's happened here? So again, it's a good example where we're not getting the market to mean. Remember, it's the mean reverting strategy, and the market isn't reversing on open. This is what it's telling us. We're only 33 minutes into the cash session, and the market is trending. So we're probably back to that target level, aren't we, that we were talking about before that, or maybe close to it on the other chart. I can't remember what it was now. It's 46,700. Was 46,600. Have a look at it there. But you can see what's happened here. The trending movement of the market has counteracted the mean reverting strategy. So that's triggered long rather than short, because we've crossed from below to the orange, having touched the outside of the Bollinger Band as well. So here we've got the Bollinger Band sticking to the outside of the Bollinger Band. So the trending nature of the market is not triggering. There may be another short coming up potentially, but it looks pretty strong, doesn't it? Let's flick back to the other setup. There we are. So that pivot, there we are. So that target area, the pivot area pre-Trump's tweet on Friday has been taken as the market has got to it. So not only have we got to above yesterday's high, and yesterday's high, as we said earlier, was providing our support zone. The gut rally has taken us to that. What happens now is anybody's guess, but if I'd been long trading this all morning, or trading this during the European session, the Asian session, that would have been where my target area would have been, and I'd have been out for the day pretty much. As long as my stop loss hadn't got too close and taken it out. If you go back up to the hourly time frame, you can see where all that what I was talking about earlier came about. So see this pivot area from last week, got to it now. The question is, what happens now? So you look to the left again. Next area is this nice little pivot there at 46,850 magnitude, and then the all-time high we saw last week, beginning of the October, 47,000 upside target. So obviously been banking earnings have lifted and kept them the stock market's moving forward today. Okay, so there you can see the hourly again, as we said yesterday, we said earlier, the hourly trader using this strategy is still long, thanks very much, and he's just scrolling his stop loss up. My stop loss will be around just below here now, given the volatility of the opening trade seems to have built up a bit. I might even have it there, back down there at the 21-hour moving average. notes back from yesterday, from Friday's big shakeout. So I've got some, at least half that back. Taking that position. Okay, so that's the crossing EMA and um, the stochastics and Bollinger Band setup. I've run out of time yet again, so I'm going to have to do part 3 of this. And I'm going to use the triple exponential moving average and the moving average adapter. I really like this one next time. But then also have a look at VWAP. I know a lot of you trade with the VWAP, volume weighted average price, similar to a moving average but different. It's got a volume element to it. Lots of people get really attracted to that. So we use the VWAP, how to use it in an alignment like we have the alignment of the moving average, like we have the 9 and the 5 and the 21, or the 5 and 9 and 21 all in order when we've got strong trends. Same with the VWAP. You can have different types of VWAP, different time frames, different anchors for the VWAP. I'll explain all that next time when we look at VWAP and moving average. So thank you for your time today. I will be back with you tomorrow. Obviously, there's um, no news this week. The US shutdown is still the case, so I'm just reorganising when I'm doing these live webinars and live events for PropTrade.com this week. So that was Scalping. We were live. We're probably live on Friday morning for the European Open. I think is what I'm planning to do. I can't remember what I was planning to do tomorrow, but I'll let you know then. Tonight I've got 1700 hours, 5 o'clock GMT, Universal Standard Time. I've got a podcast with an old colleague of mine from Kenya. She works to interview Sylvia. We'll have a chat then, so try and find us out on the ether. If not, I'm sure we'll clip some of it up for you guys and stick it on our website later on as well. People are still, again, I'm an old-fashioned sort of guy. I'm 60 odd, and books still have kept me the winning on the winning ways. Trading in the Zone was one of the very first books I bought, along with Market Wizards and the new Market Wizards of Bob at the same time, actually. And then a day or two later, I bought the Remnants of the Stock Operator. So these are 3 or 4 of my first lot of trading books, and they've kept me in good stead the last 30 years. So you can't go wrong with any of them. If you haven't got very much money, you've only got $30, $20, and the 3 to buy this one, Trading in the Zone, because this business, my friends, is by far above a mind game. So mastering the market with confidence, discipline, and a winning attitude. Trading in the Zone by Mark Douglas, absolute classic. All about you, my friends. Accept losing trades, keep those losing trades small. You live to fight another day. Don't overcomplicate things. Whether you're scalping, whether you're a swing trader, whether you're a position trader, keep it disciplined, keep it smart. Okay. 2 of my favourite books in the last few years, one by Tom Hugard and one by Steve Goldstein. Similar sort of things they talk about. Tom really opened my eyes with regard to adding to winning positions. Very, very aggressive, or he appears to be on paper an aggressive, big hitting trader. But as he subtitled his book there, what normal thinking never wins in the trading game. And that's what it is, written by a high stake day trader. And he's certainly that. But it's all percentages again. So, we've got a big account, these numbers seem massive, but it's a mindset again with Tom, and very much what Steve talks about as well. Steve was a big, successful trader in the city in the 80s and 90s, but very much gone down the teaching and coaching. His podcasts are fantastic. The Alpha Trader and the Art of the Currency Trader. And he's very much about his approach and this systematic approach, the mental game trading, harnessing the power of inner self to fuel trading performance. And that's what it is. We beat ourselves far too many times. So do look Steve up on X and Twitter. Tom's less active now. I think he's got a Telegram channel, hasn't he? He's got his own website. But 2 fantastic books as well. Can't recommend those hardly enough either. So take care, my friends. We are theproptrade.com. It's our first anniversary this month of October, so we've got lots of offers on. I know Diwali's coming soon. We've got some interesting Diwali um, offers. So get to the website, theproptrade.com, and we are all here to help you, my friends. Get yourself a challenge. We're here to help. Everything starts from a few dollars upwards. Basically, you get a $5,000 account for one step account of one step or 2 steps, like the Express Challenge. $5,055. If you're new to us here at the Prop Trade, if you're new, 25, you're offered for new first time buyers a 25% discount on any of the products except the $100,000 account, because we think that's aggressive. It's really well priced anyway. But $40 gets you a $5,000 account. It's not a massive amount of equity, 5,000. Look at 25,000 or 50,000 maybe. Get a few $100s together. Get yourself a $25,000 account. If you're new, as I say, it's only $131. Gives you the ability to take some big positions and get to the funded account. Yeah, your funded account will be $25,000 as well. So anyway, check the website out, theproptrade.com, and come and join us on Discord as well. That's where all our chat and discussion and support is done. And we are the grown-ups in the room, as we say. So take care, everyone. We'll see you again next time. Part 3 of scalping strategies. Sometime, perhaps next week, the shutdown continues, or even later this week. Maybe tomorrow. Who knows? Anyway, take care, everyone. See you soon. And may the pips